JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 24th of February 2021. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank's website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one I want to pick up here is the German DAX. So just a quick update. So basically I'm just going to go through a few instruments that I looked at this morning just to see how everything's kind of getting along. But yeah, guys, looking at the German DAX, we can see that it pushed back above the 21-day EMA, and basically for now, at the moment, I mean, it's just kind of oscillating around the 21-day EMA. So that means that I'm still sticking to the same idea that in order to go, let's say, for lower areas still here, I mean, not only that I need to see a break of this 13,830 zone, but also a daily close below this area. Yep, and that could do the trick for more sellers. For the upside, I would need to see at least a push above the 14,026 territory right here. But then, of course, we need to be very careful and be wary of this downside line drawn from the high of the 8th of February. But if that fails to provide resistance, then of course, yes, higher levels could be met. So in other words, guys, for now we're probably going to take a bit of a careful approach here, maybe neutral one, and just wait for a violation of one of the levels that is needed here in order to consider the next directional move. Now jumping into NASDAQ. Now yesterday we saw a huge decline here, and yep, it drifted below this upside line here again, and we've managed to hit the area near the 12,000. Actually, let me just double check this a little bit here. So there we go. So we've managed to hit the area, the low of the 15th of January, which is around the 12,758 territory. So approximately around there. And then we rebounded. We saw this strong rebound and a move higher. Of course, at the moment, what I can say here is that I'm going to be very careful because, and let me just actually redraw a few levels here, because this chart, I haven't looked at NASDAQ for quite a while with you guys. So let me just kind of redo this a little bit this way. So excuse me. Basically, what we could be having here is, well, of course, the first things first is this key important support level, which is, as I said, near this 12,758 zone. So yep, we had a good test of it. We had a nice rebound from it. Now we could be maybe, again, just maybe, it could be forming a possible maybe head and shoulders. But again, maybe I'm getting a bit ahead of myself here. But nevertheless, I'm gonna keep that idea in my head because let's say looking at the futures market right now, the cash index is trading around the 13,219 zone. So we're above yesterday's close, so that's a good sign for the bulls. We're not far from it, of course, but nevertheless a positive sign. Now, if we can get the index pushing further north, for example, then maybe we could see a test of this upside line from underneath, or maybe even this 13,477 territory right here. And then this is where the interesting bit could come, because if it struggles to push higher, for example, and let's say struggles to get back above the 13,700 mark right here, we could see a nice slide back down. And basically, let me just grab a curved arrow here. So for now, what I'm going to consider here is potentially something like this, guys. So again, this is one of the ideas, but if it pushes back above this upside line and climbs above the 13,700 zone, now of course that's where we could go for the upside again, and we could go for the all-time high, which is currently around the 13,880 zone or even above that. So keep that in mind again, but also do not exclude this scenario. Now, I'm not saying that you should go short, because again, this could work out, I mean, the opposite way. I mean, we could just push further north here, and we could just overcome all these key resistance barriers and then hit a new all-time high. So basically, long story short, some confirmation is needed first, but again, I'm here just to throw out some ideas for you guys. So yep, you'll be the judge. You know yourselves better, and you know your trading style better. So you decide what's more convenient for you. But either way, guys, I mean, even if it does form a potential head and shoulders pattern here, still we couldn't do anything until we would get a drop below this 12,758 zone right here. This would be that safe zone, because again, a breakthrough this so-called neckline, yes, that's when we could finally kind of fully consider this to be as a potential head and shoulders pattern. But again, even so, for now, I mean, maybe, like I said, I'm getting ahead of myself a little bit too much, because we even don't have a right shoulder, so maybe it's not going to even form. So, but to have this idea in the back of your head somewhere, yep, you should definitely have that one. DXY, the dollar index is pushing, or at least trying to make its way higher. For now, to be honest, I mean, looking at this picture, a nice good drop below the 90.25 territory. That's what I'm still waiting for, because again, although I mean it's showing some positivity today, still, I mean, we're hanging near this 90.25 zone. Sorry, it's the 89.96 territory right here. So we're currently hanging around the 90.25 zone, maybe just fractionally above it, but also at the same time we're below this downside line taken from the high of the 5th of February. So in other words, although there is a bit of a like I said, I would say positivity here, still we need that break here. We need a break of this downside line and a push above the 91.05 territory right here, and then we could take it from there. For the downside, pretty straightforward. Drop below the 89.96 territory here is needed in order to go for a lower low. Gold, quick update again. So did push higher initially, but as you can see, it failed again. Not far from the 21-day EMA, not far from that 200-day EMA, and you can see that, yep, we're seeing another slide. So in a way, everything's kind of working out according to this plan that I've drawn here on Monday. Yeah, for now, the only thing is we can do is basically consider this one, consider this level right here, the yesterday's low, which is not far from the high of the 17th of February here, and that level is around the 1795 territory. So nice good drop below the 1795 could open the door to slightly lower areas. However, guys, this is the point where I'm gonna maybe a little bit contradict myself, because the situation here is we could potentially maybe see this one as being a bullish flag. However, again, too early to talk about that. For that scenario, I would need to see a push back above this 1810 zone here, and then yes, higher levels could be met. So for now, basically, long story short, in order to do something here, we just need to kind of wait for a violation of one of the levels here. So for example, for the downside, to aim for slightly lower areas, a drop below the 1795 territory is required. For the upside, a push above the 1810 zone is needed, because even if it does end up being a potential bullish flag here, still I would need to see that push above this 1810 zone in order to get a little bit more excited with higher levels. But at the moment, the commodity is drifting lower, so all eyes right now are on this 1795 zone. Bitcoin Cash. So this one is a mess, I would say. So after kind of this is where, okay guys, this is where I said to you that when I was covering Bitcoin Cash recently, and I was saying that we might see this little consolidation as a potential bullish flag here, with a nice pole being right here. But what I said to you, that if you want to be on the safe side, wait for a push above the 750 zone. And this is exactly why when we have a potential bullish flag or a bearish flag, always wait for that confirmation break, guys. So don't rush into anything. So we can see that here, for example, initially it kind of showed a bit of consolidation, so it looked like it could maybe push higher. But what I said then, that even if it drifts a little bit to the downside here, but finds good support near the 631.70 territory right here, then yes, we could see maybe a nice rebound, then a push higher. But as you can see, it kind of broke this hurdle, well, quite strongly, and yesterday we saw a further decline here, and well, we even saw a test of this upside line drawn from the low of the 28th of January, and we also got a test of this other upside line drawn from the low of the 23rd of December. So I talked about this one, and basically, well, I mean, we had a perfect test here, and we also of the 100-day EMA here shown as the green line. So in a way, everything kind of worked out nicely here for the sellers. But now, today, for example, we can see that the bulls are trying to kind of get back in control. They did try to push the price, the rate actually back above the 553.10 zone right here, marked by the high of the 19th of January, but they failed to remain above it and drift back down. However, they're currently staying above this upside line. So basically, it's no man's game right now here. So basically, let me just adjust a few of these arrows just for our future reference. So if we see the rate drifting back, the reason why I'm saying the rate is because it's BCH against USD. So if we will see the rate drifting back down here, back below this upside line, then yes, we'll go for another possible test of this this upside line, the other one taken from the low, the 23rd of December. For the upside, if you want to be a little bit more careful, I would say at least wait for a push above this barrier, the 602.60 territory, roughly around here. That's marked by the high of the 11th of January, and if we get a nice push above that, then yes, higher levels could be met. So for now, that's the little game plan for Bitcoin Cash. Now jumping into a few pairs, some of the pairs I've looked at this morning, just to kind of see what's happening with them. And if you remember, this morning I talked about AUD and ZD, and here I said to you that well, we could see this one dropping further south here, potentially aiming for this 1.0718 mark, and yeah, we've managed to reach that area, and this is where we're currently getting a hold up. So quite pleased with this level. So very nice, kind of a very nice test. Now the big question here is, can we stay above it? If we can, then we could see this scenario working out, but the curved one, the back to the upside. But if it doesn't, if it starts drifting lower, now all this area here in between these EMAs is going to be somewhat of a neutral one for me, but if it starts dropping somewhere below the 200-day EMA, and let's say it falls below this little hurdle, the high of the 8th of February, and that's roughly around the 1.0673 zone, and if we get a drop below this area, then yes, lower levels could be met, guys. And then we'll take it from there. So yeah, be very careful in this one, be very cautious, but yeah, certain levels need to be met first before we could, let's say, continue with the next, let's say, directional move. So for example, long story short, again, to summarize quickly everything, if this area here continues to provide support, this 1.0718, together with the 21-day EMA here, then yes, we could see a nice rebound and a push back to the upside. But if it starts dropping below this and eventually falls below the 200-day EMA and this 1.0673 territory, now that's where lower levels could be met. NZDJPY, also quick update. Now this one is on fire and this one continues to rally, and look at this beautiful move. And I talked about this one this morning, and yep, we've managed to reach that 78.30 zone. And let me just remind you what that level was. And that level is, just bear with me one moment here. There we go. So that's the high of the 12th of December of 2018. So we managed to reach that area. Now the big question here is how far can we travel further north? Well, can we actually overcome the 78.30 zone? Well, let's wait and see, guys, because again, don't want to rush into anything yet here. Let's first see how it behaves near the 78.30 zone. If it stays below it, then yep, there is a chance for a bit of a corrective move here to the downside. But if it doesn't, then well, I mean, the sky's the limit for this one. Or I wouldn't say actually the sky, but the levels of 2018 could be the limit for that. So yeah, keep your eyes on that one. We can see that the pair is trading still above this this upside line here, drawn from the low of the 19th of January. So yep, still kind of showing the upside, showing the trend is to the upside. USDJPY, I mean, this morning I talked about this one, and I said to you guys that we were hanging above this this 200-day EMA and above this 105.35. I said that my next target is the this area right here, the 105.67 or even the 106.11, and well, we've managed to reach this area, the highest point of October of 2020, and that's around the 106.11. So my next question here is, can we move further north? And of course the momentum is on the upside here, and yep, and there is a chance for this one to drift further north. However, what I want to be careful with is, of course, we'll keep an eye on the market sentiment. If that improves, or should I say, if we see the market sentiment being in the risk-on environment, then yes, USDJPY could continue popping higher here. But if something comes out, let's say there are some worries, then maybe we could start seeing this one consolidating here, and basically eventually forming a possible ascending triangle. But again, that's also something that I'm maybe getting ahead of myself here, but yeah, there's something for you to keep in mind. Also, the next pair here, GBP CHF, that's something that I mentioned this morning as well, and I told you to keep an eye on the the 1.2820 zone, roughly around here. That's the highest point of February, and the 1.2845 territory, and that's the highest point of 2020 basically. So we managed to pierce those two levels today, but as you can see today, the rate drifted back down below it, and now the big question here is, will it stay below this? If it does, then maybe, just maybe, we could see a bit of a corrective move here to the downside. But of course, let's not get ahead of ourselves. First, let's see where this daily candle is going to end today. If it stays below it, wonderful for the sellers. We could see maybe a bit of a corrective move to the downside. But if it doesn't, well, I mean, it could continue just dragging to the upside. But at the moment, let's be very careful here. GBP USD also pushed nicely to the upside. However, on this one, it's showing that it wants to form a possible shooting star, guys. So reversal signal. Will it be one? Well, just let's just wait and see, basically, because we've seen several times where it forms something like this, but then the next candle here actually pops here to the upside, and yeah, we continue kind of the up move. However, let's not, like I said, let's not get ahead of ourselves. First, let's see how this is going to play out today, where this and how this pair is going to, or what kind of candle this pair, this one is going to be. If it does form that shooting star, then there's a good chance we could see maybe a bit of a corrective move here to the downside, at least towards this upside line drawn from the low of the 4th of February, and then yep, we'll take it from there. GBP, EURUSD, and well, I mean, this one's drifting back down, guys, and of course you understand why, because the dollar index is kind of pushing a little bit to the upside. So in a way, there is a bit of weakness in, or should I say, actually the opposite, strength in the in USD. And we can see here that reflection in this pair. However, if you want to be on the safe side still, guys, I'm waiting for that break of this so-called neckline in order to go for some higher levels. Until I'm going to get that, well, I'm not really, or should I say, I'm waiting for that daily candle to stay above this area. Until I'm not going to get that, well, I mean, I'm not really, let's say, getting too comfortable with the upside. With the downside as well, I need to see a drop below the 1.23 zone right here, marked by the low of the 17th of February, and then yes, we could go for maybe some lower areas, because at the same time the rate could be placed below the 100-day EMA. So guys, that's it for this session. I hope you found it useful. Thank you very much for your views, for your likes, guys. I really do appreciate that. So that was just a quick overview of some of the instruments that I looked at this morning, some new ones, and yeah, I hope you found it useful, guys. Thank you very much for joining in. I hope you're going to join me tomorrow morning, as always, my Traders Espresso, 7 o'clock GMT time. For now, have a wonderful evening, stay safe, and I'll see you later. Thank you very much, and bye-bye.